I filled her with helium. Yeah, over Kansas somewhere. Dr. Phil? Dr. Phil? Welcome everybody to Markonomics 101 presents Hoot Loot, the show where you be informed, be amused, but never be misled. We tell the truth, we tell it like it is, and unfortunately what you just saw a minute ago was Dr. Phil hanging up on me, and I'm going to get to the bottom of it. I'm sorry that it's going to probably take some time out, but I am steaming mad, and we'll do that. We'll talk about that in a minute. Also, at the end of the show, we are going to have the announcement of who won Earn and Learn. So that'll be at the end, and let's see what else. We have a whole bunch of stuff going on. This show is called The Science of Investing Part 2. And this will combine a little bit of what you saw last Wednesday with actually a market analysis, and one that doesn't exactly concur with what I've been saying. So, as I've been saying, you have to be flexible. You have to incorporate new information. You cannot let your ego get in the way. And boy, am I hot and handsome, and if I were a woman, I'd be all over me. But, I don't let that get in my way. I promise. So, in any event, please like and subscribe, and tune us in. This is always a fun thing to do. It's right there, and we'll be back with the charts in just a minute. Welcome back, everybody, and I'll tell you, before we go to the charts, and I know y'all want to see the charts, and they are fantastically informative today, but I'm so steaming about Dr. Phil hanging up on me last week that I'm going to call him and get to the bottom of this, okay? So just pause with me, bear with me for a moment, and then I can get back to my insane sanity, or whatever you call it, that, I watched cable news the other day and just for a second got a headache. That thing can give you a stroke. So, anyway, I'm going to call him, and just bear with me, all right? So here we go. Oh, hi, Dr. Phil. I'm still kind of pissed off at why exactly you hung up on me last week. She's fine. She got popped by a flock of birds, and it just floated down to the earth. Okay, she's fine. She was, she didn't get hit by News Chopper 11. That was the big fear. And she'll be back some point. She was over the Carolinas, so she had a nice little ride, and, she'll be as good as new pretty soon. But forget about that for a second. I want to know why you hung up on me. I was desperate for advice. I want to make this work out. She's your ex-fiancé and a former patient. And confidentiality. Oh God. Can you at least tell me, was she before Elon, after Elon, when? G. Powell? Dr. Phil? Dr. Phil? Well, forget about him. I didn't want to talk to him anymore anyway. Jeez. Unbelievable. Okay, let's calm down. Do a little zen here. Okay, a little meditation here. Like right here. Okay. Om. And we are going to go to the charts. And I just got hit with a major piece of bad news. I don't know how it can get any worse, but I'll handle it. Okay, so the Dow Jones we're going to start with, as always, and it's really compressing to what will probably be a huge move. Now, I have claimed, or I have believed, that the huge move would be down. And all of a sudden, the part about getting stuck on a worldview, once I looked through the charts, things changed a lot, and the odds changed a lot, and I want to fill you in on that and exactly how that was determined, because I'll show you exactly, and this will be similar to the Science of Investing Part 1, in that we're going to have a real good, really good type of, a drawing of the pattern that all markets go through. And it's really a very, very normal pattern. It's a stair-step pattern. It's up, pause, etc., etc. And So on we go to the Dow, to the Nasdaq 100, and again you can see the in green the uptrend. You can see in blue the descending flag, making it a bullish pattern, and our winner knew that because that was the question. And so what you see here is also another move up in blue, about equivalent to the last one. And but look at that bear flag. I mean, to break up out of it, you're going to have to go like maniacal to actually break up out of that thing. It's sloping really high. So, I'm going to call it bear flag for now. And the Nasdaq is right back to its highs. But oddly enough, the canary in the coal mine is actually heading on down by a big margin. And thank God Elon is not talking to me, because I don't even want to talk to him anymore. I'm just had it. It keeps with this Mars stuff all the damn time, and anyway, S&P 500, same thing. Look at that. Rally, pause, rally. And the pause is slightly downward sloping, making it a bull flag. Exactly, a bull flag, because they are descending, not ascending. Descending. They're sloping down. When it slopes really steeply, how do you break out of that to the positive? You can't. And if you do, it's going to be very short. So here we go, and it looks like it's in a healthy pattern. I mean, I see no reason to be bearish right now, except interest rates. And that is going to be the test. So we're going to get to that too. The small cap index, it's in a rounded pattern, but I'm starting to learn. I've actually learned a few things myself, doing this. Not only am I trying to educate and amuse and all that, but I'm actually learning myself as I go through some of these charts. And I go, geez, that's interesting. This works a little differently than I ever knew. So, it's a learning experience for me, and hope a great one for you. So, on with the Dow Jones Transportation, it is screaming higher. The Dow is making new highs. So we have a Dow theory buy signal. That's when two of the Dow Jones averages make highs around the same time. I don't know that they're terrific signals or anything like that. I wouldn't rely on them. But, they've proven to be more correct than not. So we got to be very, pay attention here to what's going on, or we're going to end up run over. Ace, would you please? Gosh, he's so irritable this morning. I don't know what it is. I think the dog food had some kind of chemicals in it or whatever, because he sure as hell has been in a bad mood all day long. All right, Ace, and Gesundheit to you too. He's also sneezing now. Oh God, I hope he doesn't have a fever, or you know what he's going to end up having to get by force. And I'm not going to talk about it. What I am going to talk about are things that matter. And the CRB index of commodities, again, move up, downward, descending flag, bull flag, a breakout, about the same length of move on the way up, almost at the same angle. And that's what's critical. It's not accelerating, it is going at the same angle. So you have every reason to believe here, and certainly the chart is, a few more days will really help, but there is a tiny building descending bull flag, meaning that commodities are very likely to have yet another move up, equivalent possibly to those two moves. And usually they could have several. They could have 10 of these moves up. So you don't know how many they're going to be, but what you do know is historically commodity cycles have lasted for a decade or so, and a long time, and we are at its infancy. Really, at its infancy. This is like buying, dot-com stocks in 1994, and they were all the rage, and all of a sudden you became an instant billionaire, and then you lost everything. So, the Lord taketh and the Lord giveth. No, the Lord giveth and the Lord taketh away. Anyway, so unleaded gasoline, again, this is something in its infancy, and again, we have an almost similar type move in distance, and almost a similar angle of move, and a rounded top. Now, I've learned something about rounded tops we're about to show you here. Okay, but we're talking about right now inflation, because I've been beating a dead horse over that, I don't know for how long, and I still don't think I'm wrong about that. So at least I'm right about something for a change. So these are copper miners, and again, they have broken out of a bull flag, as you can see, and they're likely to have a similar move prospectively because they've already broken out. It was a very short consolidation pattern, and yonder they go, up, up and away, kind of like the First Lady. Anyway, the agriculture fund is a parabolic uptrend, and and again, it's broken out. No one eats any food according to the Consumer Price Index and my good friend Jay Powell. But here you go. People do eat food, and they do drive cars, and they do pay for gas, and they do pay for lodging, and housing is always in shorter supply. Rents always go up for the simple reason that there's always more money, but there's never more food. Okay, so the base metals fund has a similar pattern where we see a triangle pattern, and it hasn't even broken below its line yet. This thing is very likely to continue. This is a continuation pattern. A triangle is most often continuation pattern. Continuation meaning that that the succeeding move is equal to the prior move. In other words, they go the same direction. They continue instead of reversing. There are some reversal patterns that would be around the top most of the time, and head and shoulders and a few other things. But those are ascending wedge, for example. Those are the kind of things that are reliable, and we're going to have a hell of a move in these things. Base metals are everything, pretty much. Nickel, tin, aluminum, let's see, zinc, lead, lots of them. Okay, so platinum also ascending up, and again, the slope is identical to the slope of the first move before it. So what happens is you get a burst up of enthusiasm as people start to buy, and of course they chase it the higher it goes. They never buy at the bottom because it's too scary. So they buy it at the top when everybody's in and they think it's safe to go in the water. Well, in the case of platinum, it probably was. It's safe to buy at the top because succeeding the triangle, we have another move at almost the same angle, almost the same length, and it hasn't broken from it yet. And I think it could continue to go and go and go and go. So, if you don't think there's inflation, Mr. Bell, I disagree respectfully, of course. No, I've never respected him at all, so that's why he hates me. U.S. dollar. Okay, now this one's kind of in no man's land, but again, it's counterintuitive. It makes a rounded bottom, it breaks out of it, and now it's kind of come back to it. Again, it's not that precise that I can say that it has failed. It may be also, this may be a consolidation pattern prior to another move. There's just not enough data points to be able to determine that. So I never want to be premature in how I view something, maybe get an idea, but not count on it until all the data is complete. All right, now gold is very interesting. If you remember, last time we talked about that rule of thumb where the dome to the horizontal line is equidistant to the succeeding move down once it breaks through the red line. Okay, in this case, that means gold goes all the way down to 1,300. 1,300. Yeah, 1,300. I don't get it. I'm sorry, I don't get it. But sometimes when markets are like this, as John Maynard Keynes once said, the market can stay irrational far longer than you can say solvent. And sane also. I would add that part. He didn't. Silver, again, in a sideways pattern. I think this one's going to break out simply because inflation. It has to. It is also in fixed or limited supply. As a matter of fact, silver production has gone down, I believe, for 5 years straight. So there isn't a lot of silver around, and apparently there really is a short squeeze that is being somewhat, poked and nudged. We'll see, of course. Palladium. This is an important component, I think, in EVs or electric vehiculars, And Palladium, once again, broke out of a sideways pattern, and it's off and running, or so I believe. 5-year Treasury yields. This is exactly the same chart as last time. I didn't even have to change it. And what you see here is exactly what you expect from around the bottom. And it's still going up. And the fact that it's still going up, while the markets look like they're going up, is going to come to a point. In 1987, right before that crash, similar circumstances occurred. Now, I'm not predicting a crash by any means, okay? But similar circumstances occurred in that you had very high interest rates meeting very high PE ratios, and the two are out of whack. Similar to what we're seeing today, and a rising dollar. Sounds kind of familiar, doesn't it? So, we'll see. Yields on 10 years. Now, I think this one is in a consolidation pattern, I think, and that's why it has broken its parabolic uptrend. And we'll see. I don't think 10 years have anywhere to go but up, because inflation is going up. We can see that in every single index. I mean, it's obvious. I mean, it's obvious to everyone but Jay Powell and politicians in general who get everything paid for. So inflation, what? Me? Who? Why? Okay, 30 years. Again, look at that. I didn't even change this. I used this graph. The only thing I did was add the consolidation pattern into it. I added that little blue triangle. And this probably is also going to continue all the way up. Again, we're seeing 10-year rates of like 1.68, which is slightly down from its highs. It maybe got up to 177, 180, whatever. And so that 13 basis points move down is just a consolidation of this huge move. And that consolidation is one of the reasons I'm not entirely sure that the market won't break up. I still think it will, but you know what can happen here is that the more interest rates go higher, it just puts pressure and pressure and pressure, and they're really low. And now the 1 year or the 3-month bill rate is trading at like 2 basis points, and Mr. Powell has indicated that he will continue his accommodative stance, meaning that inflation, who me? You know, like Alfred E. Newman, Mad Magazine, that kind of thing. Okay, next up is some of the big, as I call them, mega caps, and Apfelstrudel is one of the mega caps. So now I've drawn a completely different way of looking at this, because I think this is more correct than the other way I was looking at it. And that happens. You have to always incorporate the latest information. Always. You can't let yourself be wedded to something that's eventually going to slam you because you're stubborn. And I'm pretty damn stubborn, and I've been slammed many, many times. And trust me, it's better to live to fight another day. So Apple also had a rounded dome, rounded top that it broke down from, but it didn't hit its target. Okay, so the target's a rule of thumb. And so in Apple's case, it looks like it's going back up again. But who knows? We still don't know exactly what's going to happen here, but we know that it came close to its target, but was somewhat shy of its target. So it's a rule of thumb. It's not an exact science, but you know, it's pretty close. Amazon, again, horizontal, break up, break down, I don't know. We'll see what happens. Don't know. I don't even know whether to call it a bullish pattern or not. It's just a sideways pattern. That's it, you know. It bores you to death, and then you can get excited about it as other people rush in and start the mania all over again. Facebook. And this one looks like, and I really don't want to admit this, but if you look at the pattern here, Facebook has had a consolidation pattern and broken up, and it's now made a new high. And it's at about, it's at a little steeper angle, so it's accelerating a bit. But, you know, Mark Zuckerberg is going to have a happy day once again. All right, Google now. Also, I've drawn a completely different chart. No island top, no Alcatraz, no Honolulu. This is, again, a pattern of step and burst and step and burst and step and burst. And it's been doing that the entire way. And it's broken out yet again. The thing about it, though, is that the last time, each time it's had a burst, it's been on lower volume, and it's also been a shorter move. So you look at the length of these moves, look at like the last one, and it wasn't that long. It wasn't very pronounced. So it's broken up a bit, but it's really kind of chugging along. And I think I can. Well, maybe I can't. Oops. There we go. Okay, my favorite company, the canary in the coal mine, Tesla. Thank God Elon isn't talking to me because, oh God, oh, he's such a pain. Tesla, now, this is hypothetical again, but I want to show you what happens when a bubble pops. And I'm not referring to the First Lady, by the way. Tesla is what looks like it had its first move down. It broke down, actually, from a rounded top. And what you see is a very sharp downtrend in blue. And then you see consolidation pattern, the triangle. And guess what? If it has an equal length of, if you project where it might go, when it breaks finally this triangle, which I think it will, because it's a continuation pattern. So therefore it's going to go in the direction that preceded it. And the possible target, I mean, it's like basically back to anywhere from like 2 to 250, and it could be lower. It could break down yet another time. There's no law that says it can't happen 5 times. That's how bear markets are. They consolidate, they move down, they get your hopes up with a little rally here and there, and that's how they do it. Like any good confidence man, like Mr. Market, who we will talk about pretty soon. Microsoft also sort of had a move up, a sideways ascending flag, very bullish, broke out. Then you have a really sharp move that's very short, again like Google had, like we saw just a minute ago, and it had an ascending flag, which is not which is bearish. So we've got a ascending flag and a tiny move up, and I tend to think that this one, it's kind of run out of gas, but they never seem to. Vanek Retail, and this is another one where I don't even know what the hell's going on here. You see the burst, you see the burst in green, which is the uptrend, and it's very well defined. And then you see a sideways pattern, and it's sort of bumping its head along the top of the trend channel. And finally, it goes up above it, then breaks down, and now all of a sudden gets a burst and goes shooting back up. And and this one, I can honestly tell you, I don't know. I just don't know. I can't explain it, and therefore I stay away from it. All right, so we're going to go on to the airline index, and here we say destination unknown, because life is so strange. Destination unknown. That's my good friend, with missing persons. She's missing lately. But anyway, right here, the airlines have no reason to be going up. There's no fundamental reason they should go up at all. That's why I say, and you learn, fundamentals do not matter. Ever, ever, ever. The chart always matters. The fundamentals do not. It's good if they're in your favor, in your direction, but they don't really matter. The bank index, bullish uptrend. Okay, nothing more to be said. McDonald's, look at that. It broke out positively after consolidation, and it had a pretty long move. And I'm going to say that this looks pretty good. The angle's somewhat steep. We'll see. See, all of them look like that. This is Coca-Cola. All right. Now, Coca-Cola, again, the same kind of thing. It breaks down. It does what it should out of an ascending flag. It breaks down, sharply down. And so there's no rule of thumb as to an ascending flag. So you can't really project the price on that, or at least I haven't figured that out yet. But what you see is yet another uptrend at exactly the same slope. And that tends to make you think it's heading higher. Heading higher. You have to incorporate that. Disney is another Dow company, possible rounded top, but I'm very cautious about it. But again, Disney is a major company, and Honeywell. Well, this is kind of interesting because Honeywell is a military supplier, and they're all excited about us going to war. God, I hope not. But that's why this one is looking really good. I mean, the angles are about the same, and the consolidation, I never knew this, but the consolidation was actually around a top. So you can actually have a consolidation pattern and a reversal pattern at the same time. And you have to really, that's where somewhat judgment comes in. And unfortunately, it is a science, but it also is an art. And you have to know the art part. IBM, fully bullish. Nothing more to be said about that. Nike in a sideways pattern, and again, it looks like it's going to have a breakup again, but we'll see. Procter and Gamble, again, this one exactly, I put this back in there because it has exactly got to its target, and I guess that's the last chart. So what I want to do now is I want to announce the winner, and I'll start with that. The winner is Ashley, and thank you so much for getting the right answer to the question, and there will be another one next week, and I'm so glad you're one of our subscribers, and we're getting them in by the ton. So in any event, I have one more phone call to make, and bear with me, please, because I'm kind of nervous about it. But I'm going to call Bill Clinton. Oh, thanks. Bill, how are you doing? Thanks for answering. Thanks for picking up. Oh, you know it was me? Okay, I'm so flattered. Anyway, you've been around the block, right? I mean, you've gotten around. You have a reputation, so to speak, for being a ladies' man and all that. And the First Lady is kind of stepping out on me, and I'm learning more and more about her past. And so I'm wondering, you stayed married despite, things that went wrong in your marriage. I want to make this marriage work, but I don't know how to do that right now. And what? She was an intern in your second term? An intern? You